Red alert for the chip sector. A growing number of companies sounding the alarm over a global chip shortage. Names like Ford, GM, Volkswagen cutting back production due to a semi-squeeze, while Sony says the chip shortage is making production of its PlayStation consoles difficult. So what does a chip crunch mean for the semiconductor stocks? Let's bring in Jefferies tech sector specialist Jared Weisfeld. Jared, great to see you.
Thanks for having me back again.
How should we think about this chip shortage? Should we think about it as meaning a giant and deep backlog for these companies, or is there an element of demand destruction the longer the squeeze goes on?
I think it's more of the former than anything else. I mean, when you think about what just happened here over the last 12 months, you had executives that were preparing for a crisis and didn't add the appropriate supply, and demand rebounded at a far greater than expected rate. And what you're having now is lean inventories across the board and capacity utilizations that are running at 100% plus in some cases, just trying to eke as much capacity out as possible. And that's really leading into shortages that are acute across the board. Automotive is certainly the most pronounced, but it's leading into shortages across the entire ecosystem, from graphics cores to basically everything that touches end devices. So it's certainly pretty severe, but I think this is more of just a shift from a demand perspective as opposed to demand destruction.
So how should we think about who benefits the most? And do we think that maybe, these chips are already under contract, and so there's no pricing power, there's no additional gain for these chip companies, or is there?
So I think it depends on who we're talking about. So if you take a look at Microchip, which I think is a great example in terms of what exactly is going on right here, because it's a diverse company that touches so many customers, 100,000 plus customers globally. They talked about something last week called the Preferred Supplier Program. They are requiring 12 months of visibility in some cases with non-cancelable orders because they really want to make sure that demand is there to increase that kind of visibility and get those commitments from those customers. So I think it's ultimately going to turn out to be a positive thing for the industry in terms of increased visibility. You have longer lead times that are stretching, and right now you're putting in the orders in place that are actually existing. So ultimately, I think it's a positive. And when you think about just the broader industry, if you control your own destiny, you're in a better position. So I think a lot of folks are looking to Texas Instruments, for instance, because they are an IDM. They're an integrated device manufacturer. Texas Instruments was the only one that ran their fabs hot during the downturn at 100% utilization rates, and they built this inventory because they saw what happened in the great financial crisis. You want to make sure that you have the inventory on the other side.
Jared, I'm focused on the EV with the electric vehicles with the automobile companies. That's going to obviously increase the demand for semiconductors and chips. A name that we don't talk about a lot, NXPI, and another one On Semiconductor. NXPI holds 11% of the marketplace. Is that a place to focus attention as well?
Yeah, I mean, I think NXPI is a great example. I mean, NXPI holds market-leading positions with respect to LiDAR, 77 gigahertz radars. They are really viewed as an interesting play on EV. And look at what they said on their earnings call. I think the exact quote from the CEO was, "The automotive supply chain is empty." So with NXPI, you get the benefit of not only having the cyclical recovery with respect to the automotive restock, but then on the other side of that, you have all of that secular goodness that you're talking about with respect to EV. And same thing for onsemi. Onsemi has been transforming the company over the years. They just brought in a CEO who's highly regarded. He sold his last company, obviously, Cypress Semiconductor, to Infineon, and he basically laid out a vision to go ahead and prune the product portfolio longer term and focus on those secular growth drivers such as automotive and EV. So I think those are two great examples in terms of companies that are levered to those themes.
Jared, thanks so much for helping us make sense of this. We appreciate it. Jared Weisfeld of Jefferies. We mentioned NXPI. Jared mentioned the conference call. Infineon had very similar commentary on its conference call about the shortage here. Tim, how do you think about this, and what's your play here?
The good and the bad of this seems to be around Taiwan Semi or TSN or, one of the biggest weightings in the emerging markets index, too, because I think over-reliance on TSM has left us in this place where we have a chip shortage. And again, this is a company that now has, 3 to 4% of their chip sales going to auto and 51% to smartphones, because it's been a lot more interesting, but there's been a lot higher growth, but it's left the industry overly reliant in a place where I think hasn't been as much focus because it hasn't been as interesting. So, but in terms of the trade, first of all, overall, semiconductors, SMH at 245, all-time highs, continue to be a leader of this market, and I wouldn't get too far away right there.
Shepard Smith here. Thanks for watching CNBC on YouTube.